Okay, we are now live and on YouTube, and our meeting has begun. Um, Chip, you weren't here. Sandra, I don't think you were on also when I was explaining how we'll proceed today. Perhaps David wasn't either. We are, what we'll do is we'll go through each operating area, and the manager of that area will go through the budget and point out in particular significant differences between what's in the 2021 budget versus the 2020 actuals. So whether it's significant in the case of revenues, I'll ask Janet to do that, and in addition to it, admin. So whether it's in big increases or meaningful increases or decreases in expenses, capital items within the operating budget, anything that distinguishes where you're going, what's happening differently from last year, recognizing that last year was an unusual year. Once we've gotten through the operating groups, then we will then take a look at the capital improvements fund and talk through some of the meaningful items there. Most particularly, I think the annual roads program, which is most of the capital improvements budget. Before we get started, most of you will be aware that our municipal income taxes are now for 2021 going to be much higher than they were even last year. Last year, at the end of the year, we received an unexpected payment of about $790,000, which of course improved our performance relative to budget quite considerably and brought us into surplus.
Tim, is that in these numbers?
If you'll wait, I'll explain that in a minute.
Okay.
The 790 would be in the 2020 actuals. Mm-hmm. In 2021, we were also advised at that time that to expect a similar payment in 2021, and the numbers that are in front of you reflect an additional payment of 790,000. However, at the beginning of this week, we were advised by Rita that payment actually was $2,055,206. So the 2021 budget municipal tax revenues, rather than being 2.3 million, should now be 4.5. I'm sorry, 3.5 million.
Let's not get carried away. Yeah.
Yeah. So and we will.
The 790 and the 2.2, the 790 is the same number, but it turned out instead of being 790, it's 2.2.
That's correct.
Okay.
So you would increase the municipal tax in 2021 budget from 2.3 million to 3.5 million, taking out the 790.
Okay.
You understand what I mean? Net of the what's already in there.
I'm glad you mentioned that, because I think, like Nancy, I didn't understand that. I thought there were two different deposits, so to speak. So
No,
it's still wonderful.
Well, that's
news.
helpful, because it's a total of 2.2, right? Not a
2.01. It's 2.022. So it's just
right, but it's not a total of 3 million.
right.
That's correct.
The number should now be 3,522,000 instead of 2,000,003.
Well, I was going to make it 3.5.
Fine.
We'll make it
Okay.
3.5.
Fine.
So that, of course, flows all the way through the financial statements. So our general fund reserves and our total reserves all will be higher than what you see in front of you by that additional
million two.
Million two.
Okay, that's very helpful, because it would have appeared that we might have had a lot more.
Correct. That's right.
Yeah.
So so there is that, and but with that I want, and it's our intention then, once we've had this meeting and if and when there are any alterations to expense or capital items, that Janet will then revise the 2021 budget for all of that, including the increased revenue, and get that back out to the committee and then ultimately, of course, to council.
I guess I have one other question. With all of our deferred expenses and things that we've been wanting to do but haven't been able to do over the last year or two, are we going to reconsider some of those for this coming year?
Nancy, I think you've frozen.
Are we going to reconsider those for this year and possibly meet again, or at least have a phone call about that?
I think we'll hear about that from each of the individual department managers as to what of deferred expenses they have now put into this year's budget. And then if there are additional things, I suppose we can talk about those now as well. I don't know that we need to have a second separate meeting on that. And after all, if council, in its wisdom over the course of this coming year, determines that there are additional projects that they want to sanction, they certainly can do that.
And I guess on the other hand, looking at the general fund expenses for this year at 4,777,000, it's a lot higher than it was last year or the year before, or going all the way back to 2015. So the budget's high already. Yeah,
I would say this. Let's get into the numbers. And let's find out where what we have planned for this year, and rather than look at it globally, let's look at it more granularly. And with that, Janet, I'm going to turn it over to you to talk about anything you feel is significant on the general fund revenues, but more importantly on the admin side.
We already covered the income tax. Property tax, that number comes from the county, and so does the local government fund number. So those I don't predict, I just get from the county. Mm-hmm. Costs, that's the court fines and costs. You can see from 19 to 20, it went down. We knew that was happening. I'm not sure yet, after talking with Greg, how much different this year will be yet as far as contact with people. So Greg and I came mutually to the decision, that hopefully it would be a little bit better, but again, that's hard to predict. So that's why that number is what it is. We had a big year in building permits. So Dave and I talked, most of the ones that we knew were coming over at County Line and help me out.
Sherman.
Yeah, over there.
Brigham Road.
Permits, yeah, most of those permits have been done. So I think there's one more, right, Dave?
Correct. Two. One that's about ready to go under permit, and another one that on County Line that hasn't come in yet.
Right. So again, that's our best guess right now. It could be higher, could be lower. The interest income, now that was based on what we have right now. I know we'll probably be sending more over to Ancora when we get this February distribution. So that may go up a little bit more. I'm hesitant to change that at this moment, but we could maybe anticipate that being a little bit better than the 100,000.
Mm-hmm. Well, can we pause on that, Janet, because 150,000 in 2019 and 154,000 in 20, unless we think there's going to be a drop in interest rates, and there may be, I don't know what we've assumed, and we're going to have more savings on average, more cash balance over the course of the independent of the additional money. As you can see, the total general, the bottom line, the whole village was scheduled. Yeah, it was going to start coming back down, but we certainly would have as much as we had in 2020. So why would it be less than 2020?
We have a lot of things maturing next year.
But they'll get rolled over.
Right,
think
but they're
that-
probably not at the rates that they were at.
Well, that could be. And what I would say, Chip, the only added point is that 100,000 is approximately what Fidelity has forecasted interest income to be over the next 12 months as of December 31st. So that's right off the statement. And I think you have a very good point. I think it's certainly, knowing what we know now, it's quite likely to be higher than 100,000, and maybe we should put in at least 150.
Well, yeah, that would be an adjustment for that new revenue line for sure. And
Right.
maintain. I hear what you're saying, and if it wasn't for the additional revenue, 100,000 sounds like a prudent number and hopefully better. But given that we're now adding another $1.2 million to the number,
Yeah.
we should be bumping it up.
So why don't we? I agree with that, Janet. Why don't we adjust that to 150?
Okay,
Say
the
you
notes
could-
will say that Tim Reynolds.
Yeah.
It's
You could
it's
split
it's the Reynolds all-water adjustment.
That's
Oh, no,
all
no,
right.
no. It's all you, Tim. No.
Will you
It-
underwrite?
it's-
Will you
Just
underwrite?
so
it?
it's-
split it.
Just so
You want
it's
me to
not the
underwrite
mall.
that, David? David
It's
wants
not
me to
the-
underwrite that.
It's not the mall adjustment.
Then shortfall.
You could split it. You could split the difference.
Yeah.
That's okay.
That's right.
Either way, it's uncontrollable, right?
That's correct. That's right.
Correct.
Nothing.
Well, I hate to base expenses off of revenues that may be too high. That's my
Yeah,
own.
I hear that.
No.
So anyway, that's how I came up with that. The ambulance income is just an estimate. It should be higher because Mayfield Village will not be keeping any of our life force collections going into the new year, like we've been doing the past few for those calls that were over and above our contract amount. So we should be receiving all of our income on those. And hopefully they'll be raising the fees that we do collect on those. We'll be following up on that with Life Force, I imagine, and with Mayfield Village. Miscellaneous, that's been just skyrocketing because number one, that's where we put our SRO income from.
Mhm.
Also, the last couple years, we've just had the BWC refunding a lot of monies. We've had other reimbursements that have come. So it's just been an unusual time as far as other income.
Well, with the exception of the SRO income, it's all kind of one-off surprises, isn't it,
Yes,
pretty much?
yes,
Yeah.
exactly.
How much is the SRO income?
That's 80,000 a year.
What's the acronym mean?
Sorry, it's,
School
that's our
resource
safety
officer.
officer. It's
Okay.
the safety officer in the school.
School resource officer. Okay.
Okay,
Yeah.
where's the rebate from the county road program from 2020?
I don't put that in anywhere. That would, for 2020, I guess it would have to go into miscellaneous.
Well, it was, right? Because you got it in 2020. So do we not want to be consistent? if
I
we're
didn't
gonna
get any
spend the
this year,
money-
I don't think.
Oh, wow. Dave, we
None
need to
from
change that.
2019.
If we get it in the same year as the expense, I put it back against the expense. So if I would have gotten it this year, I would have put it back against the expense. If it's for the previous year, I have to put it in miscellaneous, yes.
Correct, but each year it's been a lag of 1 year.
Didn't we get
Dave and I-
19 this year?
Yeah, Dave and I talk about this every time we look at the street budget, so
I don't recall. I'd have to look at my miscellaneous income. I don't.
well, that's like 70 or that's 80 or 90,000 dollars that I think we need to be accounting for. I understand how you have to account for it. It's just when we make the decision to do the county program, it's why wouldn't we? Because we get a big chunk of it back the following year. So,
Sometimes the following year, sometimes it's 2 years.
but
Yeah.
we've been getting better at dropping it, at getting our bill out to the county quicker. Is that a fair statement, Dave?
Yeah, we'd certainly try, but again, when they get to it and finally write the check.
Do we have a way to estimate what we might get in 2021?
I think Chris has we've gone through that a little bit.
We have that, I think,
I think
somewhere.
we did look at that and come up with what that number might be.
So Dave, can you get with Chris and Janet and see what we've been paid in 19 and 20 and what year it was related to, what program year? And
The
then if
last
we
one
was,
I remember getting was from 18.
well, that would be, then we're going to get a big windfall in 2021 because we spent money in 19 and 20 with the county on county roads. So
We'll verify it. And then
yeah,
look what might come in 2021.
Yeah.
I
Let's do
agree to
that.
be
I don't,
conservative, but
yeah, I don't know that we need to make an adjustment, but because we really truly don't know if it's going to come in 21 or maybe even 22.
You just-
But it would be good. It would
Okay,
be
wait a
good to
minute.
know what that number is.
We did get 62,932 this year. And
And what was that from?
that was for 19.
And that would be
So
in the
that's part of the
219,000.
actual 290.
Yes.
Yeah. So that's the action point on that. It's let's just see what's kind of the outstanding that we're waiting for from the county. So we have a feel for it. And maybe we adjust, maybe we don't. Miscellaneous.
Okay.
I think, Janet, I think you went from interest income to ambulance income. Do you want to say anything about the rental?
No.
There's
I
really
mean,
not much to
jump-
say. It's going to be what,
Yeah, I mean, it's just the monthly payments that we get.
it jumps
We don't
around.
have, we do not have Barclay anymore. I did not get the one from Russ Lincoln in December like I usually do, so I'm hoping that's coming in January.
That was renegotiated, wasn't it?
Only put into his name instead
Oh,
of NAST.
Were there adjustments that needed to be made because of COVID and people that were having problems with rent and
No,
there were no adjustments made?
no, I mean, Howard Hanna did something, but they're paying the additional amount over the rest of their term, which I believe ends later this year.
correct. And Warren Morris is looking at those things now, actually. And so there will be some negotiation. And the post office,
Well, the post office still has another couple years on it, but they're renegotiating early. I don't know why.
yeah, I don't either. In fact, well, anyway,
Yeah, yeah.
Interesting.
we're going to get into that because I'm not real happy with their ideas. Anyway,
Okay. All right. Thank you.
I assume we're going to talk about the building. I'm glad Sandra brought it up because we, have plans to do some things there. So they might turn out to be a different strategy this time from last time based on our
correct.
ability to help out.
Yep.
So I guess I'm an advocate for, that's one of the reasons I brought up my question about other ideas of what we might be doing, because I would like to look ahead to improving that whole situation over there.
Yeah.
Yep.
Good.
And that's
Agreed.
one of the capital things I think is really important for the future of the village.
Yeah, I'd agree with you, Nancy. Maybe not for this budget
It's
process. but
something I've
certainly
been
end of the
working
year
on as
progression.
long as I've been here.
Right, I'm all in
We
favor, but
never had any money.
well, let's move on to admin's expense budget.
I don't think there's anything really different here. Insurance, I may be a little bit low. It depends on the flood insurance policies. They go up exponentially, but we did reduce the number of policies we're carrying. So at least it's less than it used to be.
under other professional services, have you assumed that we enact or proceed with the master plan this year and the consulting fee?
You didn't let me finish.
Oh, sorry, well, you jumped
You
down to
started
general.
you started out saying there wasn't anything to talk about.
Then you jumped down to general insurance, so you skipped over. So I was going back up, sorry.
Well,
Sorry.
I have the master plan in there, but I don't know. I needed somebody to tell me whether that's a go or not.
Tim, before
Yes.
we start this, were the departments given guidance on income adjustment this year? Salary adjustments?
Yes, there's a wages and salaries committee that meets a few weeks before the budget committee, and they review salary increases for all. So those numbers come from the Wage and Benefits Committee.
What was the guidance?
Well, the guidance is what you see in the budget. Oh, in terms of increases, I think that
Those numbers
were we
can
at
change.
2%?
We did 2% this year.
2% this year.
2%, same as last year.
I believe that's right.
Okay. Thank you.
So yeah, I need guidance on whether or not the master plan will be going forward.
Karen, what do you think? I think we should assume it, particularly given the way the vaccine's likely to roll out over the first half of the year.
Sorry, I got interrupted. I didn't hear that part.
The master plan.
Assumption for the master plan.
I'm hopeful that it'll be in the second or the last half of the year, but I mean.
Right.
Well, it's
I
in
think
the
we ought to
budget
assume
now. Yeah.
Right.
Yeah. I think that's prudent.
Okay.
You know, given the way the vaccine's progressing, I would think, but.
So that's in other professional services and is a big part of why it's going up about 30,000, 35,000.
Thanks for.
And
Income tax expense may be higher as well, because with more income tax coming in, their fee will probably, increase as well. So
Whose fee is that? Who's that actually paid to?
Rita?
Rita charges us that much to process our tax receipts?
it's 3%. It's every month. Every time they give us money, they collect it all, and then they take their fee out of what they collect.
Okay,
So it was
well, then you ought
higher
to,
at the county.
then you certainly ought to adjust that, given the,
Well, I
be
know, but
consistent
when
with
I
that
did
in
the
revenue.
budget, it was based on the 2.3. So
No, I
Yeah.
understand. Right.
So,
that number will go up. So.
incidentally, as I recall, Rita's was less expensive, was it not, than
then
the county?
CCA, yes.
Correct.
And look how much money we've gotten since we moved to Rita.
That's right. You know, I'm sure they'd love to claim credit for that.
Yes.
Tim, on that windfall payment we're expecting, I do
Yes.
several years ago, you received a tax revenue which was ultimately contested, and I think we lost it. Is there any chance of this amount being audited and reversed or diminished in some way?
Well, that's speculative, but what I would say is that Rita, our fellow at Rita, has developed a pretty good relationship with the particular taxpayer's accountant, and there did not seem to be any animosity involved in this payment.
That's good.
We did not lose on the other one that you referred to. We have not lost that, and at least so far, our decision has not been challenged in court.
Oh,
I was going to ask if we were,
okay.
I was going to ask if we were going to put anything in the budget for legal expenses on that.
At
Hasn't
least
been
so.
any-
Well, that's so far. There's no indication, or not much indication, that there's going to be any legal expenses.
That'd be great.
I'm not going to make any predictions on that, but I don't think we
Okay.
should put it in the budget.
That's fine.
All right. The transfers are what they are based on,
I had one more question for Janet.
good.
Anything
Go
in
for it.
particular under the miscellaneous for up to 11,000 from looking at prior years? Is there some?
It's just the way that I divided out my expenses. The office expenses would be office supplies and small equipment, and then dues, training, and other expenses would be under miscellaneous this year.
Okay, so if I looked at
I
those two
had no
combined in
training
prior
or
years,
anything.
if I looked at those two categories combined in prior years, then you're consistent in 2021. Okay.
Yes. And I didn't have any training costs in 20. And
Yeah.
I usually do training.
Okay.
Okay, so just to go through the transfers, we'll talk about the capital improvement fund later after we're through. Wastewater is down. Is that a result of our moving to a private contractor?
Yes.
Well-
I'm assuming we'll have a fee from the county for last year. And then we have 2 payments due on our OPWC loan.
And
then we'll
that's
have
right. The
8.
loan is done then too. That's right.
We've got 3 more payments because they didn't collect last July's.
Okay.
because of COVID. So we have 2 this year, 1 next year, and then that'll be done.
But is
And
that
then,
under the wastewater category?
yes.
Excuse me?
The OCP is part of the wastewater category?
Yes.
Okay.
And then our police pension payment is down from 2020, but not appreciably different than the previous year. Is there anything going on that, or is that just a straight, that's what we owe?
Yeah, I mean, that's based on their salaries, and 19.5% of that is what the village pays to the pension.
Got it.
And
Okay.
salaries come in at,
So that's just straight math.
yes.
Okey doke. So I know that we've had comments and questions as we've gone through, but is there anything other to discuss on the administration budget?
I guess I still don't understand the wastewater. I would have thought that was going down more. It doesn't.
Well,
Well,
it
you
will,
know, you
but
got,
Sandra, we
get to
have to
the
pay the
account.
county for last year.
Okay.
we don't get the benefit for
All
another
right.
year.
The county in a year can be 150,000.
All right.
So we owe them for last year.
Okay. All right. You said that. Thank you.
Tim,
Yeah.
at the risk of being a nervous Nelly, this won't come as a surprise, but I don't know insurance. I mean, if 2019 actual was 143, and I know we took some buildings out and whatnot, but every indication is that everyone is going to get walloped. So I just don't want to be too far off.
When's our renewal date?
It's December, but right
Right.
now I have the flood insurances coming in.
So that's what we don't know about is our flood
Yeah.
insurance. So general insurance, which we have at 120, that's a known number.
Well, general insurance, I pay the flood out of there as well.
Oh, do you?
The
So it could be.
general
so
that
if-
we just approved was like just over 80,000. Was it 80,640? That I'm getting ready to pay. So that came due in December, but I'll be paying it this month.
And what was flood in the 2020 number? Do you know?
Not off the top of my head.
And have you had any
Right
indication?
now it's just under 40 for the 2 policies that have come in.
Mm.
So we're already at 120.
And what do you have left to come in?
I think 2 more.
So we know that 120 is too low.
Yeah, and I can adjust that when I get, hopefully those other 2 are coming.
Okay. So that's to be, hopefully, well, one way or another, I think we have to estimate it up before it hits, we get to council.
Yep. I
Okay.
already put a plus there.
All right. Thank you. Thank you, Ann.
Thank you.
We're paying the law director more.
Or I
this
should
year.
say Nellie.
Excuse me?
Why are we paying the law director more this year than last?
That's whatever it comes in at. His retainer is 2,500 a month plus additional work.
So we're
I know what the additional work is going to come in at.
expecting more additional work this year than last.
No, I probably budgeted the same last year. It just came in lower.
Okay.
Because in 2019, it was 47.
Yeah.
Or
I'm
48, really.
I wondered why this last year was low.
Mhm.
Yeah, there just
Too
wasn't
much.
as many things that came up. And I did budget 45 last year.
We
Okay.
behaved
Okay.
better last year.
Yeah, we
Didn't do anything.
Yeah, we didn't do anything.
Right.
We didn't go anywhere. We didn't hurt anybody.
That's right. So let's, with that, on that note, let's move on to police. As a matter of fact, that's appropriate. So Greg, if you'd kind of walk us through what's significantly different in your budget, and in particular here, and anything that we had deferred from last year that might now we'd be playing catch up with.
Okay, thanks, Tim. Really, if you look at it, I think if you want to start at the top, you'll notice the salaries, wages are higher, and I think Janet might want to comment on this. I'm not sure, but we didn't. We had one officer we didn't budget in for last year because the officer was out with the the BWC injury that was going on. She ended up coming back in April. So, she's back and doing fine here right now. So I think that's because of the increase. Am I correct there, Janet?
Yeah, I mean, the base salaries for all the full-time officers with longevity and incentive, I came up with 910,000, and then you had budgeted 90 for part-time. So 10 plus the 90 came to the million.
So that's, that's what's on top right there. As far as, the other.
Wait, can we go back to that? Because I understand that the 939,614 for 2020, but if I just mathematically bump that up 2%,
it won't work.
That's 18,000. I understand, but we had 3/4 of a year of one policeman. So if I'm not going to get to specifics, but an average police salary is 70,000. So 3 months of knocking that out, we get an additional 3 months. Somehow I don't get to a $60,000 increase. Are you bumping up the part-time in addition?
Yes, they all got increases. Well,
yeah,
but Greg comes up with a total for part-time. I don't increase that. He tells me what total to use for part-time.
I understand, but is
The
that
salary
higher?
people-
No, I
and the
understand the
salary-
salary. We went through.
I
all
know,
that.
but we've got 2 people that are probably get bumped up to top pay this year. We have the extra person for the whole year now.
This is 9 months last year. I got that. But Greg, are you bumping up part-time?
I think it's always been 90, hasn't it, Greg?
It has been, that's, we did.
And that includes Dorothy.
Yeah, that's a good point. That does include Dorothy. So as far as part-time goes, I mean, we currently have 4 part-time officers, and so there's a number, kind of in there. If we find maybe the right person, we lost one part-time police officer who retired in April, and he was, for lack of a better term, he was our workhorse. He was retired, did a great job, worked whenever we needed him. We don't have that luxury anymore.
Right.
So,
you know what, Greg? Last year we budgeted 991, 120. And this year I'm budgeting $1 million. Luckily it comes in under.
Okay. You know my bugaboo. You added an entire additional person last year for the reasons that we understand. And yes, COVID had probably some impact, but with that extra person, you were able to drastically reduce your overtime. And now you're popping it back up. Now we're not talking a big number here, but it just seems like you've added a person and budgeted a pretty full-time overtime. What I would think that one person helps you to prevent having to do overtime.
Yes, but not as much as you might think. Like I said, I think the part-time police officer who left pretty much averaged about 30 hours a week, and he was readily available. Whereas right now we have 4 part-time officers who all have full-time positions. So they're very limited in what they can work, which leads to an increase in overtime for full-time police officers.
Okay.
Would you be recruiting
Well,
Greg, for that role? I mean, I don't know if there's other. I mean,
it's very
maybe
hard.
Some
because
officers are looking to get out of more high crime communities, and even if it's 30 hours a week rather than 40, maybe it's still better for them. I'm just suggesting there might be a way to kind of.
That's something we look at all the time. And I will tell you that there's not a small department that I'm aware of who isn't in the same situation that we are. You just don't want to add. We don't want to add just a person just to say we have a 5th part-timer. It's what they're. You got to kind of like target hire. If we find the right person who is readily available, that's who we would be looking at. It doesn't really serve the village well if I have another part-timer who works full-time elsewhere, who works a minimum of 40 hours a week at the primary employer, plus anything extra he or she might work.
Yeah.
So that's why I say if we fall into that right person, and as we know, usually the retired officers are older and, the midnight shift. And so, we just wait to see if, somebody may pique our interest, and then we might look at that person. So, of
Okay.
course, just to finish this thought, on the flip side of that, with a young police officer, maybe fresh out of the police academy, you could find those guys all day and give them 30 hours. But they're going to be looking for a full-time job, and they're not going to be here long. So the return on your investment after 3 months of training, before we really start, when you factor in uniforms, training and everything like that, they're going to have to stay for almost 15 months before we start seeing a benefit. And with today's climate, there's a lot of openings for full-time officers because of everything that's gone on, but not a lot of interest in part-time.
Just as an aside, while I like to challenge Greg on the number, I took some time this last summer with the long range plan. Greg gave me all the detail, and I attempted to model out an entire month. And I can tell you 12-hour shifts, 2 officers at a time, et cetera, and it is very difficult. So I think while I like to challenge you, Greg, you got to have a little uncertainty in there, because there's just no way to have certainty when somebody calls in sick and you got to rebalance everybody because they're on 12-hour shifts 1 week for 4 days, and then 3 days the next week, and the bounces around, et cetera. So
yeah, I mean, scheduling's
job.
Yeah, thank you. Scheduling's no different from department to department. Smaller departments, we all talk, and it's pretty much the same everywhere. But just one other note that kind of relates to salaries. We do have a couple officers this year, I think, and this factors in too. They pick up that extra week of vacation time. The longer you're here, the cap is 4 weeks. So in the beginning, they get 2 weeks. And so that's another 80 hours that they have to factor in. So those things add up over time.
Okay.
So, I'm sorry.
No, it's all right. Thank you.
Just a couple things that I thought I'd just kind of highlight. Our uniform expenses, that was pretty much deferred once we talked about that last year. That's why that number's so low. We barely spent anything. I just kind of put a, stop to, to that when we did. I think my budget was about 14,000 last year, Janet, if I'm not mistaken. So I think we kicked that up 1,000 just because.
15 last year, Greg.
15 last year. Okay, so that, relative, it's the same then, at least for budgeting from last year to this year. Dispatch, just real quick, we're just going down the line. Training was another thing we kind of deferred. Our Lexapol, which is about 7,000.
Can you stop on training, Greg? Because we certainly, as citizens in our country, learned some things this past summer, and this whole need to bolster police officer training to be just that much more trained on dealing with the, whatever the phrase is, what the phrase is, but is 18,000 sufficient for training for this year?
Yeah, I think so, because as of right now, in fact, just today, I registered 2 of our officers for some de-escalation training.
That's the word, de-escalation. Yeah.
So, but keep in mind, a lot of the trainings, the practical training, the hands-on training, the DUI training, anything like that, we're not really seeing that live right now because of the pandemic. So that hasn't come all the way back. A lot of the training has been virtual right now. So my sense is, we'll see a lot of virtual training, at least for the first half of this year. That's just my guess. So I'm comfortable there. We have $7,000 that goes to Lexapol, which is part of our training budget. That's our web-based training module. That's been great for us. So that's, I think that's already been paid this year, actually, but.
So just as a question and something to think about as we look through this year and beyond, I know that in private industry, an awful lot of almost all training went virtual, and much of it will stay that way.
Mhm.
That it's proven to be effective and significantly less cost, and the big surprise, much better attendance. So
Yes.
you know, and so as we go forward, we may well see that percolating in public service training as well.
Greg, I had a question about the training. Once the officers do take the training, are they taking an exam or getting some sort of certification that we know that they have had that, so that for their records, it's actually shown?
Well, sure. Any type of training, just to use the example, I just registered 2 for their de-escalation training here in February, and we may even increase that to 3, schedule permitting. But yeah, when they have a complete training, they always receive certificates, and they have a training file, individual training file.
I'm
We put
referring
all
to
that in
the
there.
virtual though.
Yeah, we do.
Okay,
Yes, absolutely.
all right,
All training is documented.
right.
So
You're gonna go
Just,
to dispatch next?
I'm sorry, Larry.
Are you headed now to the dispatch, Chagrin Valley Dispatch?
Yes, we saw, I think it was a 1.5% increase, and that was across the board with all of the communities. So that's a pretty hard number, 144.5. And Nancy, I didn't forget about you. I reminded Nick that this is our dispatch coordinator, if you will, Nick DeSico, who does a great job. But anyways, there was some chatter about looking to see if there might be a better formula for dispatching between all the communities, and that was discussed. And I think Nancy would like to be part of that, and I advised Nick of such. I'll actually follow up with him. I'm not sure if that's something they're going to go ahead and do or not, but he indicated that's what they would be, not knowing if there's a better model, because it's kind of based on call for service right now, and there's some math that goes along in there that he's had a track record with. So that may change. They may do something, but they're aware that you would like to participate in that, Nancy.
I thought we were going to find some kind of reduction there based on more communities being included. So
Exactly.
it seems like we're not really moving forward on that very easily. They don't really want to reduce our expenses, I assume.
Well, when you bring on these communities, the larger communities, obviously you have to increase your staffing. And I think that's what you see. I think the whole key from what I'm seeing, I think the whole thing is that when you take on smaller agencies, you probably don't have to require an increase in staffing, let's say. Like when they took on Euclid Police as an example last year. I mean, because, they have so much activity down there, they had to hire, whatever the number was, maybe say 8 more full-timers or, so that's what you see when you partner with the larger agencies.
Well,
Yeah,
but that's worth challenging though, because it's hard for me to imagine that it's linear and that there's some element of being of reducing overhead across the entire base.
absolutely.
And so I think that Nancy and efforts to really take a look at how they're calculating those charges, and if it's some sort of linear calculation, I think that's something we really ought to challenge.
Well, what we
Absolutely.
can always do, and if the council would, if you would like me to, and Nick DeSico is very accessible. It might not be a bad idea if we want to give him maybe 10 minutes of a council meeting, just to kind of, you guys can feel free to ask him questions. He'll tell you how he does things and whatnot. I mean, that's certainly an option if somebody would, if you're interested in hearing about it.
That's a good idea, but I think I'd like Nancy to look at it first and then bring them to council so that we have.
However
some
you want to do it.
questions.
Yeah, we want to do our homework.
Exactly.
We want to know more before we
Exactly.
in a council meeting.
Because it was more than the cost. It was the service too. We have service complaints. So Nancy
And-
address all of that.
Greg, are the communities all on now and the new place in Parma and all of that
Yeah, there's so, you know.
all
when we
in and done finally?
Yes. So when we started with Chagrin Valley Dispatch, which 2013, we were the 7th community. And right now, you know, and if Tom, if you know the exact number, you can help me out here. I want to say they're up to about, was it 35 or 36, something like that. But
Yeah, that's about right.
about right, yeah. And so we have the Chagrin Valley Bedford Center, which is where our dispatching takes place. And then there's one in fact, Mayor, you and I went out there, the one in Brecksville, the new build they did out there, and for the southwestern communities there. And then there's Cleveland Heights.
Yeah, Cleveland
Heights. Yeah, so you know, they're around the area, but ours is really based out of Bedford. So they did just pick up the Cuyahoga County, the Metro Parks, which is very big. It's a big outfit. They have about 100 police officers. So they just picked them up. I want to say they went live with them in November or December. So I think that was kind of part of it too, the 1.5. They didn't know where they were going to be at because they had just gotten started with them. That's why the talk of, you know, the reevaluation to see what formulas were out there. So I'll follow up with Nick. I actually we have a meeting scheduled for Tuesday. And I'll follow up with Nick and just kind of, you know, get the latest update and report to council on February.
I think it'd be a good idea to have a meeting with Nick, Nancy, and whatnot ahead of time, and then report back and get more questions, as opposed to putting them on the spot in a council meeting.
Okay, well, I can do that, Nancy. Why don't I talk to? I'll get in touch with Nancy next week, and you know, maybe we'll sit down. We'll talk about this, and if it's something that, you know, me, you, Nick, maybe Tom, whoever wants to, you know, join in on a Zoom meeting, we can go ahead and do that.
Sounds
All right,
good.
that's good. I think that what people are looking at, it's more or less that charge has been essentially flat since, well, for the last 4 years. And in the meantime, there's been significant growth in the dispatch center. And we saved a lot of money by going to the dispatch center, but we were also part of the promise is that as they grew, that the costs would decline. And we're not seeing that. So we'd like to start out understanding why they say it hasn't declined, and then maybe challenge that.
So just as a rule of thumb, for every doubling of volume, your unit cost should be 80%. So I 100 and my cost is, or my unit volume's 200 and my cost is 100. Then if my volume doubled to 400, my cost would not double. It would drop by 20% unit cost. And so we're not seeing that. And there's no difference in dispatch for community A than community B. So it's straight linear volume and concept. So either our number of calls are going up dramatically, or they're not being very efficient as they add people, or we're just getting a straight number each year, not reflecting the savings that they should be generating.
Right.
So there's some ground here.
I think we got an action plan, at least to the start of one, and we'll pursue that. As we go down your sheet, I see we're not buying a car this year.
Well, what about alarm system? I know you're weaning out.
So before you do that, when we're talking about dispatch, we also had some discussion about billable calls and non-billable calls.
Right, that's right.
You should talk to Nick about that as well and put that into that category. But Chip, you're right. So we should talk about alarm monitoring, because that was one of the things from our long-range plan that we discussed, having a sunshine set date for terminating this aspect here. So Greg, you could talk about that for us.
Well, I think my job is just to provide the information, and then I would imagine it would be up to everybody here, maybe make some recommendations moving forward. But so I actually received a phone call from Frank Baxter, who is the owner of American Security, just a few weeks back, and I shared this with the mayor and also with Larry. And it wasn't a surprise because it was mentioned over a year ago. But so essentially they're raising, so it's $8 a household right now for basic alarm monitoring. We have, I think, roughly 275 or 80 accounts. So that $8 will be increased to $9 on the next bill. We haven't paid the bill yet this year, quarterly billing. So that is going up. So essentially, we were able to reduce the, through some homework and work that we had to do reaching out to residents over the past year. So we got that number down to about 26,000, and with the increase, it put us back to 30,000. So that's how come that number is what it is right now, 3,000. It reflects the $1 increase.
Right, and it's a question for the mayor and council is how I think we've all agreed through the long range plan and much discussion that is going to be phased out. The village is not going to pay residents alarm costs. And the question has been, well, on what schedule and what time frame? And I know the mayor has been thinking about that. But that right. So for right now, we have a budget that does not reflect any phase out this year.
I'm hesitant to phase it out during the pandemic for the simple reason a lot of the technology that is in the 275 homes, mine being one of them, is old technology, and so I think people will want to change what they have. So there's a cost to them involved with that, and it's pretty hard right now to get people to come to your home to give prices on things because nobody wants to let people in and whatnot. So I think it's kind of a hardship right now if we were to change this. But when we do it and start making the people aware of it, I think it's something that we do start out with a letter to those residents that are actually involved in it. I mean, if residents aren't involved, I don't think they don't really have an interest in it, other than being maybe mad that we're covering the expense from the village standpoint for 275 residents. So I'd like to start with a letter with that, but I think we kind of have to get a handle on the pandemic in fairness to the residents, being able to change their alarm or get prices or anything else.
Yeah, I think the other issue too, Karen, as we discussed, is there's really a small percentage of the village that is using the service. And when we do give people notice, I'm thinking that it's possible that American Security might be able to offer a reduced monthly fee that makes the whole thing a little more palatable. So when we get there, we can talk about that. But I guess it needs to be in the budget until we make that decision to eliminate that program.
I don't think we want to forget about it, but I don't think we want to be aggressive with it right now under the current circumstances.
Yep. All right.
So one more question, Greg, you were going through and seeing because you certainly found some residents that aren't actually even using the alarm, but nobody knows that because we just get a bill for the village. Are you continuing to call and see if they can?
Yeah, I mean, there's certain a good example might be like next door to where the mayor lives. They have, they're doing some work there. It's a new resident, so we're gonna have to follow up with that homeowner to find out if in fact they're gonna use that service. Okay, and so, those always come in. We're not, quite honestly, we haven't been, actively promoting it because, I'm not sure exactly where we're going to go with it.
I'm just wondering the ones that we're getting billed for.
Yeah,
I thought you were finding some that don't even use the service.
It's
have a whole different alarm system.
Let's back up. I heard something there with you, Greg, that we have a new resident coming in. I don't want to start adding people to this that we're paying for a new resident. It should be that we're looking to phase out the old residents that have.
They're grandfathered, right? They're grandfathered, and there are no new ones.
Not.
Yeah.
Okay, well, what I can do, 2 points. Well, one is I will certainly correspond with Frank, the owner, and I'll advise him that effective immediately, we will take on no new accounts.
Right.
I can do that, no problem. And then the other point I would just like to make sure everybody's aware of, that if we do discontinue the service, at some point, whenever that would be, all of our buildings are free monitoring right now. All of our public buildings, including, town hall, service department, cross the street community house. So we would have to pay a monitoring fee to have our buildings monitored.
It's likely to be less than 30 grand.
It would definitely be less than, and I don't know what that number would be. It
Right.
wouldn't necessarily have to be American Security. It could be, Guardian, whomever, but
Right.
that would have to, that needs to be kept in the back of your mind.
My
It's
hope
part of
is
the
that we
equation.
maybe have two, American Security being one, and maybe somebody else, or even three that give a price to the homeowners.
You might want to consider,
So,
Mayor and Greg, you might want to just consider as a starting point to write a letter to those 257, just saying, we've been monitoring your system. We were interested in knowing, we're planning on a phasing out process, and we just want to clarify at this point whether you are, using this, the 257 or
Doesn't
35,
American
whatever it is,
Security
is a lot
know
lower
whether
than
you're
that.
using the system or not?
We've asked
No,
that
they
before,
don't, because
they don't know.
the residents never receive a bill.
No, but don't they know whether they're monitoring someone's home?
No,
No, according to
Not
them.
really. How
according
would
to
they know?
them.
They send the
Right.
bill to us
Will they
directly.
call you if you're on a low battery or whatever?
Sure, they'll do that, but as far as updating records and whatnot, they're not going to do that because they send the bill right to us. We pay it.
Okay.
But
Well, this
Greg-
is all the more reason for us to, so once again, we have an action plan,
right.
and the mayor's not quite ready yet to pull the trigger fully, but at a minimum, we need to advise American Security that we're not taking on new accounts.
I will do that, and I will work with Gene and I have had some discussion because we were in a little bit of a holding pattern. We knew this meeting was coming up, and we were going to kind of
Right.
talk about the alarms. So we'll go ahead and work on drafting a letter, sending it out to the 275 homes that are being monitored, and we'll see if we can get that number down and find out who's using it and who's not.
So
There you go.
maybe immediately we get rid of 20 people, who knows?
Yeah, we did. We got rid of about 35 earlier this year, so there might not be a big change in that right now, but there'll be some.
There'll be
Okay.
some. All right, well, let's move down finally to capital costs.
Well, no,
No?
Tim, I'd like to, just other expenses, just pop it from 10,000 to 20,000, and the
Okay.
maintenance agreements from 14,000 to 20,000. So that's gone from 25,000 to 40,000. Again, what's going on there?
Well, the maintenance agreements, I actually have that. They're gonna come in. It's really no different than last year. In fact, I just gave Janet, I think at least one bill, maybe two, that we didn't receive the last quarter billing until after the first of the year. So that should have went into 2020. It should have been paying out of 2020, but we couldn't do that. So I had to,
Okay,
put it
got it.
back into 21.
On what, Greg?
That would have been, it could be leads. We have about $18,312 in the maintenance agreements. And that includes leads access, using Honey Valley's range, our VHL house program, our pet program, mayor's courts, a whole myriad of things that come into those contracts, that come out of those contracts. And then the other expenses, that was the other thing that I deferred. And really what we talk about there, it's always, for the past several years, it's been about 20,000. That hasn't changed. And I really tried to defer everything. Those are going to be, we didn't buy any computers this year. Those are the things that are needed around the station. Things that come up all the time. So that hasn't changed. We just didn't spend that much of it this year.
Okay. Makes sense. Sorry, Tim, back to your.
I was pausing just to wait, just in case. No, let's move on to to the capital. There is no car in the budget this year. As I recall, we advanced a purchase of a vehicle in 2020 because we needed it, and also we had an opportunity to get one. On the new equipment side, looks like you're pretty level relative to last year, but still you're up at 20 grand. What is in the new equipment?
Okay, this kind of, and I was going to kind of jump in before, but I think we kind of beat that up pretty good. So, like the radios, well, these are the portable radios. They're very expensive.
Okay.
This is the new Mark system. They go for about $4,000 per portable radio. And one of the added benefits, the back end benefits to Chagrin Valley Dispatch is because they have such a big, they have so many members, they buy so many radios, we are eligible to receive portable radios at about $1,000 per at a discount. So that's another back end value with going to Chagrin Valley Dispatch. So that's just another factor that it's kind of big. So we actually bought 4 radios, or we'll be buying 4 radios. We did already actually, and then those were about. Actually, it did come in under. I had 13,000 budgeted for that. They came in around 12. We already got that out of the way. So, and then we have a speed sign. That's another portable radar sign. We have one of those right now. We're going to purchase another one, $4,000 to $5,000. 5 being on the high end. So that's what you got there. And then what the one-time install cost with our cameras are going to be going in. And it's about 2,000. So with those 3 items there, it came to $20,000.
Okay, all of which have been discussed in council, actually.
Yes.
Quite a bit.
Okay. And I think
just one other thing I'll just mention, we will be selling one car on Gov Deals, and that's coming up. We're going to put that probably on there next week. So we're hoping to
How does the receipt from a sale get accounted for, Janet? When they sell a car and they get in, a nickel for it, how much? Where does that go? Into miscellaneous income?
That goes into capital. If it's
Okay.
of a capital asset.
Okay.
An offset, it's a saving.
An offset to capital. Okay.
So I'm going to ballpark that around. We'll see. You never know what you're going to get. Chief Robinson, I've been talking to him about getting it on Gov Deal. He's had some success with that. So I think that I'm going to put it around $5,000 to $6,000. We're going to see.
I think it's also important, Greg, when we're thinking about other expenses, you mentioned computers and that we should be thinking about body cameras for our officers.
Yeah, and that's that's sitting there right now, and it's definitely there, no question about it.
I think it's getting more important all the time from what we're seeing. So you should really keep that in mind.
Yeah, and I do like the body cameras, and I think they protect everybody and everything like that. But one thing that I'm trying to, see if there's some funding for out there is, they have, like, for instance, there's a company out there called WatchGuard, and what happens with the WatchGuard system is you can incorporate the body cameras along with the dashboard, the in-car cameras that we have. Okay. And ours are very antiquated right now. We have mobile vision. They're about 15 years old. So, that's going to be a big ticket item. And it's and there's some really nice features with this WatchGuard system. Officers can pull right in the back of the station. It'll automatically upload right to the server. We don't have to dock it and all that. So those are one of the things that I'm looking at, but that is going to be a big ticket item. No question about it.
Just so we know that we think about
Definitely something to bring up to council as the year progresses, Greg, as we think about things that we might want to be looking at. But Janet, this is not a question of the 2021 budget. It deals with the benefits, I guess, the workers' comp, Medi, operations, OP and F, whatever all that stands for. Just why did it drop off so much in 2020? Was there just a invoice that we're now getting in 2021? 2021 looks more consistent with 19 and 18, but it was obviously dropped way off in 20. Do you know why?
Yep. We got a refund in December that I applied back to those accounts.
That's a BWC refund, right? Yeah.
Okay. Okay. All right.
Okay, I think that concludes the police department. Are there any other questions, comments there? If not, Chief Robinson, you're up.
All right, thank you. When we look at the budget, we see that there's some, significant increases. The largest single reason for that is the EMS contract has gone up. So we have increased that budget by $81,000. That is, part of this new 3-year contract we have with Mayfield Village. Another large increase is actually the deferred expenses from 2020 that we will incur in 2021. So between those two items, the EMS increases and the deferred costs from last year's budget, it's $112,949.
Can you remind us what was deferred?
We deferred a number of things. We deferred the thermal imagers that go on the air packs.
Yep.
So we deferred that at $10,000. We deferred the one set of protective gear, the helmet, coat, pants. So we deferred that. And we also deferred 8 portable radios, the very expensive radios that Greg mentioned. And then at the end of the year, we were approached by CVD, who was making a large purchase with a significant discount per radio. And, Tim, you're aware of this, the mayor's aware of this. I basically went back to both of you and said, okay, well, we have an opportunity here to order these radios and pay for them in 21.
Right.
So we did move ahead with the purchase of those radios. And that kind of dovetails into the capital expenditures for this year. Mm-hmm. You'll see, line item wise, that we've got $72,300 in portable radios. That is switching all of our portable radios that are not supported anymore. Portable radios are basically computers now, and they are no longer supported. No software upgrades. Anything that happens to it, it becomes a very expensive paperweight.
Yep.
So all of the radios we're replacing many years ago, we actually got all of those on a grant, and we didn't pay for any of them. Now, unfortunately, those grants have dried up. I hesitate to tell you this, but I did apply for a grant in the amount of $49,000. Okay, so I will not purchase those radios until I find out whether or not we get the grant. So if we do, we reduce the capital by $49,000.
Mm-hmm. Mm-hmm. But if we don't, the money is in there.
The money, I've asked for the money that we need to complete that project. That was supposed to be a 2-year project that we started last year.
Right.
We will complete it this year. So one of the reasons you see this increase from last year is the deferred expenses from last year are now being incurred expenses this year. Mm-hmm. Overall, if you look at what I've asked for in the 21 budget, it's really, in the big picture, an $8,000 decrease in an ask from what we were supposed to do in 20.
Yeah.
So, I mean, we are still watching every single nickel and dime. I was able to trim a couple things. Our department is a bit smaller. Our personnel numbers are smaller. So of course that means gear replacement. We don't have to do as much of it. So trying to think what else, as far as, our capital expenditures for 21 are 4 sets of turnout gear, fire hose and hand tools and equipment. The big ticket is the portable radios. We did switch to new pagers last year because
Right.
the other ones were antiquated. And, you know, we basically paid half for those because with our agreement with CVD, they bought half of them and we bought the other half. So we ended up with 30 pagers and paid for 15. But these pagers are also little computers that go through batteries. So I've had to kind of increase my budget just in the knowledge that about every year you're going to put new batteries in these pagers that, you know, about $35 a battery pack.
Mm-hmm.
And, you know, I mean, that's just the way equipment is today.
Well, I think we all recognize that it's important that you have equipment that's up to standard, that provides both for your effectiveness, but also equally and maybe and more importantly, the safety of our firefighters. And we've talked about these radios and the protective gear quite a bit in council and in previous budget meetings. I don't think there's anybody who would object to that.
Yeah. You know, looking at the ambulance EMS, and this isn't, I'm not pointing a finger at you, Tom, because we were kind of over a barrel, but with Mayfield Village, the ambulance EMS, you know, the increase from 190 to 271,000, that's 81,000.
449.
And you compare that to what we're getting in terms of ambulance income and revenue is 28.5.
Yes.
So again, it's really unfortunate, but we
No. That was increased to 55. Ambulance income went up 55.
Budgeted to
so-
55.
Yeah.
Right.
And again, these are estimates. You know,
Okay.
these are all based on call volume and call type.
Yep.
So, you know, we looked into the crystal ball. Janet and I put a lot of time into this. And it, you know, as much time as we put into it, I hate to admit it, it's still, you're looking into a crystal ball. You
Yep.
really don't know. The contract was very difficult to negotiate. As Sandra said, we're kind of over a barrel with this. We made some significant changes to the contract to try and reduce some of our risk. You know, it all comes down to numbers, how many calls we get and what kind of reimbursement they're eligible for.
Yeah, I'm just to clarify, I made the wrong comparison. Where it's costing us $81,000, roughly $500 more, and we're earning $28,500 more. So it's still, you know, it's still a pretty big difference of.
Right.
Oh, yes.
For sure.
Part of what we're going to look at though going, and we should do something about that pretty quick. Life Force, we got the ability to bill there, which we've never had before. So we need to look at that. And also they did go up on costs and we got that authorized and whatnot. So we did get some trade-offs, and I was thankful to see that our yearly total went down even with the pandemic. So that's all good.
Yep. I think that Life Force initiative is the ability to hard bill. And if we can pull it off, will make a significant difference.
Let's hope. Yeah.
Will we be able to track that separately somehow, Janet?
We already do.
We already do.
We do. I'm sorry.
Ambulance
That's the
that's the ambulance
ambulance
income.
Okay,
Yeah.
that's the same category. Okay.
Okay. All right.
Since we're on safety, but even though it's under the other funds, we are budgeted to spend 25,000 under a category called safety. That's a new other fund. What is that for, since we're all talking safety here?
That's the flock safety cameras.
That was the
So that's the
donation, Chip, that we set up that special fund
Right.
called the safety fund, and one of our kind Gates Mills villagers made that anonymous donation.
I didn't know what it was for. I know that they did that, but that's for the cameras. So the cameras are in that budget, but the one-time setup, Greg, is in your budget? Oh, you're muted.
You're
Greg.
muted,
Yes.
Chief. There you go.
Yes, it's what's my math here? That's correct. I think it's $250 per camera per install, one-time cost. So I figure, you know, it's 1,200. What do they have? What do they have? 2,000, I think, $1,250. I think earmarked for that.
And just for reference, the budget reflects that we're left with 5,000 in the safety budget, assuming we're getting another 5,000 in this year. Are we going to be able to spend that rather than get it trapped, or should this money that has in Greg's budget, should we add that to the safety instead so that we don't end up with the extra funds in there?
Well, if donations come in for the safety fund, then that's where they have to go.
No, I understand the donations have to come in, but Greg, in the meanwhile, is spending out of his budget as opposed to out of the safety fund budget.
Well, and safety is going to be fire and police. So this is new. So I guess they have to play in the sandbox together. And
Yeah, well,
okay, we'll have opportunities to use it. We'll have opportunities to use it.
just so one point of reference, we can do whatever we want, but we will probably receive a bill from Flock Safety. It'll probably be, I'm gonna ballpark and say May. They're in the ground, they give you a trial period and all that, so say May. And we can pay annually, which would be $12,500, so we don't have to pay the $25,000 in aggregate. We don't have to do that right away. We can if we want to, but you know, so it won't be depleted after 1 year necessarily. Hopefully we'll get more donations.
Do we get a discount if we pay up front relative?
I don't think so, Tim. No, they said, we'll bill you that way. If you want to pay us $25,000, that's fine. I could double check with that, but I know what I was told, but you know, doesn't hurt to ask.
Okay, it's worth asking.
Yeah.
We want to go the cheapest route.
Okay,
I know that's not a surprise to you.
I understand. I will find out.
Okay. With that, let's start picking on Dave.
Thanks, Tim. I guess the first one I would probably start with is the building inspection. And it's not that there's an increase in our cost. What I wanted to do, if you look at the previous years, it's relatively flat. That really pays for our electrical inspector, because I'm not certified or licensed by the state to perform electrical inspections. So from that part, it's relatively the same. What I wanted to do though is in the budget more reflect what's going on. Another inspection that we have to perform on large projects or new homes is our stormwater maintenance inspection, which is required by our stormwater permit. And so Chris Courtney has a member on his staff that's licensed for that. So it's not that we're going from 4,100 to 15,000. I just wanted to more reflect correctly what's going on as far as our inspection costs. Does that make sense?
So wait a minute, is that an increase, Dave?
It's not an increase. I'm taking his cost from a column we've always had and just moving it to a more appropriate column. It's not an
where
increase.
was it before?
It was under Chris Courtney's engineering fees.
Oh, okay. All right.
Because it was his staff performing it.
Okay, but we didn't reduce his engineering fees.
Right, but there is a little bit of we don't know if there's going to be 3 inspections or 40 inspections. So I just trying to more correctly. It's an estimate. It's a guess.
Could we go back up to your salaries, Dave?
I'm sorry?
Could we go back up to salaries? And I know we went through all of this, but the good thing, the nice thing is it's been flat for 3 years. And yes, we had, reduced your manpower by 1 in 2019. But when I look at 20 versus 21, you're going from 662,000 or 663,000 only up to 665. And you are getting pay raises. So I'm surprised it didn't go up more. I don't know, Janet, is that Is there any glitch there, or you don't have less people, do you? Oh, you have one less,
Well,
maintenance.
part of Dave's, part of the service department salaries are 2 part-timers, 3 part-timers. So I believe Mike and Tom probably worked a little bit more this year with the community house and across and doing things that, you know, that's the variable in Dave's service budget, because everything else is an hourly 40 hours a week. So the variable there would be just the part-timers.
And Dave,
And
when did
you're-
Armando take over, and when did, forgetting his name, your previous maintenance guy, when he left? Was that
Oh.
20 or 19?
Mondo was, I believe, 19.
No, 19. So that was that effect. Okay.
Right.
All right. So it must be just that, Janet. Okay. Okay. Anyway, sorry, Dave.
The next one I would probably talk about is community building. Don't really have anything significant. We do need to get on some painting on it, but that's typically performed by the service department. And
You
I
had a
do
roof
have,
repair?
I'm sorry?
I think a roof repair.
Yeah, I wasn't there yet.
Oh, sorry.
Just kidding. And we have a roof repair.
A roof repair. Sorry, Dave.
We're chasing a little bit of a leak, and I think ultimately probably the best solution is just probably tear off a portion of the roof and just replace the shingles. So we're kind of working through that. Post office, painting again, which probably for the most part should be done by the service department. I did put in there, you know, just at this point, whether we move forward with it or not, I don't know. A generator to run the building, obviously during this last power outage, like everybody, it had been out for a while, and it really does shut down.
I got some problems with the post office at the moment, so that is definitely on hold.
Yeah.
We need to pay their bills and
Now,
whatnot.
if you want it out of the budget, that's fine. It's just.
I'd take it out. I'm not even
Okay.
technically sure if it's our responsibility. So
Okay.
if they want one, they can buy it. So
Okay.
Yeah, I would pull that out. I agree. They're not up to snuff on their billing and whatnot at this moment. So anyway.
Remove that.
Dave,
Mills
Dave?
building.
Dave,
Yeah,
are we going to fix the clock?
we tried fixing it once. There was a wonderful gentleman who lived in, I believe, Saddleback, at the end of Saddleback, and he had a business. The parts really aren't available anymore. He fixed it last time just because he had so many parts. Unfortunately, he has passed. So I think fixing it is a no. We would probably have to replace it, which we could certainly.
How much is a clock?
I don't know. That I don't know. I'd have to look.
It just looks bad.
Yeah.
Sure.
Okay.
I mean, I could get some estimates. I'll get some.
Yeah,
estimates.
why don't you, Dave?
Yeah, because I have no, I mean, I don't know. It could
Yeah,
be
good idea.
2000 to 20. I just not something I'm accustomed
We
to.
could run up to the Henry Ford Museum and try and get our clock back from them.
Well,
Good luck.
yeah, I heard that there's been an attempt at that, but
Not
We
gonna
need an
happen.
elite core of a few good men to go on up
Yes.
there and get it.
Start with that.
Yeah, really.
Mills building, I don't have anything really specific planned. Again, probably some paint. And it always seems typically, you know, when summer, winter, we have furnace issues having to replace, or in the summer, air conditioning. So I just tried to budget enough money that if we ended up getting into the ones we have some money for that. The next one I would jump down to, I don't know that it'll probably take a lot of explanation, but is the tree grinding and the tree removal.
Yeah.
I think everybody's aware that after that last storm, we have a tremendous amount of tree debris to get rid of. And if you look in the history in the past, you can tell when we did the tub grinding and what years we didn't. So we're
Dave,
definitely gonna need, I'm sorry?
I wanted to know if you put a crane for the cemetery trees in there.
Yeah, I think Janet, we said we put that actually in the cemetery again to try and really reflect.
Where it's going? Okay, great.
Yeah.
I don't
Dave,
know
were
if
you able to-
anybody's seen the South Cemetery, but we've got some major tree issues
Yeah.
that from the
Dave-
storm. Totally.
Dave, were you able to call the person I suggested to see if?
He does
quote
not
would
have a
work?
crane.
Doesn't have that kind of crane? Okay.
Correct.
Just as an aside, I don't know that it would be any change in your budget, but the way winter is unfolding, we might have some storage fees for our salt.
Yeah.
Mhm.
Yeah.
Good point. Yeah.
Yeah. We've ordered two times, I think for, I believe 400 tons each. So.
We got a long way to go.
We got a long way to go.
Yeah,
You're
it's
right.
not over
We do.
yet.
Optimistic
You're right.
now.
You're right.
It's a whole lot of winter left.
Yeah.
Yep.
The next one I would probably jump down to is guardrails, signs and bridges. The biggest increase is, again, we didn't, with the deferment, I kind of deferred some of our guardrail work. And then thought, well, we have last year's work plus maybe this year's work. So I tried to, budget for that. So that includes what we had planned for 2021 plus the deferment. And then the big one would be vehicles. In the vehicles, I have a large international plow truck, which was in the long range forecast. That was
Right.
scheduled for 2021.
Yep.
I do have
How much for that?
it's about 167,000.
Okay.
Also, that was in my long range forecast this year. I was going to replace one of the tractors. We have a Kubota I think that was actually here before I came here. So,
How much for that?
34. And then we would also have what I deferred last year, which was the 550 plow truck, which is about 93,000. I'm sorry. Yeah, 93,000.
Is the new equipment related to these new vehicles? Decking them out?
I'm sorry, when you say new,
So you've got new equipment that's up quite a bit, up to
Correct,
18
yes.
grand. Is that
correct.
related to the new vehicles?
Yes,
That's what I thought. Okay.
yes, correct.
So Dave,
Wasn't there another mower?
That's would be my next one, which would be new equipment.
Right, which was
I think-
Tim was asking about.
Okay.
Yeah. Oh, I'm sorry. Okay. So yeah, new equipment is like small, blowers, the weed whackers. But I did
okay.
put in under
All right.
new equipment a new mower. Our John Deere, the one John Deere we have, is getting pretty tired. So I put in for a 0 turn.
Dave, I
your
have a question.
large plow truck,
Mhm.
how many miles will be on the current one?
That is
this
a
season?
2007. It has about 40,000 miles. But miles really isn't the issue. It's the
Right.
work hours and what it's doing. And the 550, which is the medium duty truck, is a 2006 at about 70,000. And that one, we just had to put a radiator in the other day, and the window, the rear window, Armando keeps cautioning us, saying don't hit a big bump because it's going to fall out.
Oh, geez.
He's done as well as he can to keep it in.
Dave, what are those trucks used for besides plow? You refer to them as plow trucks, but they must do something else during
The large ones aren't. The large ones are not because, well, I shouldn't say they're not actually. We do use them for berming or topsoiling. So as opposed to in the wintertime, it carrying salt in the V body, it'll carry dirt or gravel. So we'll do that. The 550s, they're everything. We use that for the logs that we have to haul, gravel, pipe. I mean, the 550s are used constantly, pretty much on a daily basis. I think that kind of concludes the general stuff.
All right, are there other comments or questions on the service budget? Which was such a good budget that Janet gave it to
Give it
us
to you
twice.
twice.
Yeah.
Yes.
Sorry about
Does that mean
that.
I have to go through it twice?
No, no.
All right, what I'd like to do next, I'd like to specifically turn attention to the capital improvement fund. But we're certainly open to conversation on any of the other funds as well. But let's work through our capital improvement fund. Did members of the committee get the spreadsheet?
Yes. And note
Yes?
that yes, they did.
Okay.
And note that $250,000 of the capital improvement fund, I've earmarked from the street maintenance and repair fund. So even though capital only has what, 981.5 in it, the other part comes out of street maintenance and repair, which is 250.
Right, so we really need to turn to page 10, right, Janet? That would cover all of that, correct?
It covers all those things unless you want to look at each fund, yeah.
Right.
All right. Can we, I think we'd benefit from just hearing what the road program, what the major items are in the road program for this coming year.
So this is page 10 we're looking at, right? Of the deck.
It's the last page, yes.
Right.
Tim doesn't have page numbers, I don't think so.
I don't have page numbers.
They're just looking at the capital improvement plan that I sent to you, Tim.
Okay, fine, good.
Tim, typically, and I think it was Chris did an analysis on our roads last year. And, he's kind of generalized. We prioritize what was most important. We don't totally have which roads and how much and where. So just based on what a quick analysis was, that's how we came up with the number.
Right, but you've got specific projects, Riverview, Fox Hill.
Oh, yes, sorry.
Okay.
I don't think I have that page, so I'm not sure.
Those were the ones that carried over from last year that we didn't do. We were reducing the expense.
Okay, so some of that, what I'm getting at, I think.
Fox Hill's the biggie. Fox Hill
yeah.
is the big one. We have postponed that at least 3 years that I can think of.
Right, that's 320 grand combined, east and west, I think.
335, yes.
Right.
Yeah.
Oh, I'm sorry, 320, that one, yeah. And then you add Riverview, which is also.
Right, exactly.
Riverview. Those three are our worst roads.
So to some extent, what we can say is that our roads program, which is much higher than it was certainly last year or the year before, is a combination of ongoing work plus significant deferred work that we're putting into it. Is that a fair characterization?
Yes, I think that's spot on. Yes.
Okay.
So Dave, you listed out the big programs: Riverview, Fox Hill East, and the county program that we've proposed. That comes to 684,000, and then you have the total of 769,000. In other words, another 85,000.
That's engineering.
That's the engineering on top of that is what that difference is.
Correct.
Okay.
That's right.
Okay.
Correct.
So we will not do any other mill and fill work on any other roads in 2021 in this budget. Is that a fair statement?
Yeah, from a budget standpoint, now I would say similar maybe to what took place in 2020. Once we kind of get the estimates from the contractor, and if we feel it's a very, very good price, then maybe we want to go for more or less, or maybe it's not a good price that we want to do less. So, yeah, I think you're right on as far as the budget's concerned. But again, time will tell. Maybe once we really dive into it and get the numbers back from the bidding.
I have a question, Dave. When the winter is over, you'll find that we have more problems. So
Probably.
have you left anything in the budget for the more problems?
That's what I'm building to, Nancy. Yes.
I'm sorry that I anticipated your concern, Chip, but I
was feeding to you, Nancy. I would be disappointed if you didn't bring it up first. So.
I guess I didn't want to
Well, I
provide too
have
big of a
one
sticker
question
shock,
part.
but, so I guess the simple answer to that is no, I don't think I really built in much.
Well, what you have built in, however, that there's a lot of things that are in this budget that are emergency or if needed kinds of items.
Right. Correct.
So, and some of those aren't going to play out and other things are going to come in.
Correct.
So while you haven't built those in specifically, it looks to me, just looking at the list you've got, that you've got cushion in here.
Yes. Yeah.
So, yeah. I mean, I hear what you're saying, Tim. The old mill Mayfield storm sewer repairs, 85,000, that's already spent.
Right.
And obviously the ODOT money's already spent.
Right.
And our assessment of Riverview, Fox Hill East was actually at asphalt rates that were closer to what we got this year. They're not based on the historical. So, so as high as this number is, what is the Som Center repaving, Dave?
So, Mayfield Heights, with ODOT is planning to repave Som Center from Mayfield Road to, I want to say Cedar.
Yeah, because they did everything north of there or south of there. Before.
Right, and up there for about, I don't know, 5 of our residents on our side, we have a tremendous stormwater problem in those heavy storms. I mean, they just get inundated with water coming to their house. Unfortunately, they sit lower than the road. So we're just trying to provide during that project possible funds of what we may need to do out in the right of way ourselves.
Okay.
To help that.
Well, I think that would make those residents a lot happier. We've had a lot of complaints up there, and every time there's a new project up there, some kind of change to someone's property, we've had a lot of complaints. So I think it'd be great if we could improve their situation. And I think it'd be very important to let them know that we're doing it.
They know. No, we've Chris and I have tried to, there's one resident who's fortunately kind of taken the lead for us so that we don't, we kind of coordinate with her or correspond with her and she spreads the word out. But no, we do. They are aware that this is happening in the future and that we're working towards trying to solve the problem.
That's excellent.
Tim, can I ask a question? It's my ignorance, really. What we're saying is under capital improvement, expenditures this year are going to be roughly the same as last year, $1 million, give or take. But in 2020, we had almost $600,000 of revenues from somewhere. It's the difference between the two numbers that bothers me, which
What are
is
you looking at?
capital improvement.
Dave, what happened there is the Cedar Road project, the county paid us, and we in turn, we had to pass the funds through, 500 and some thousand. Is
Okay.
a straight pass through. So to make the numbers apples to apples, I think that's what you're looking at.
And then only
Janet.
9,000 contemplated for this year.
Okay, maybe I'm missing something.
Well, look at page 7.
Oh.
Yes,
Capital improvement section, which is the fourth from the
right.
top.
The other income, 500 and some thousand is what the county paid us, and that in turn came straight out of the expenditures.
It never really came to us. It's just we had to account for it because we did the project with the county. We had to account for their funds and the expense of the project that we did with the county in Hunting Valley.
So you're saying the projects this year
Took
won't
the money in. It was just an accounting in and out.
And I think David's question is comparing that to now 2021 budget.
Yeah.
There's like $9,000.
Right,
Are we
$9,000 would
not-
just be royalties.
And we're not anticipating any payments flowing through from the county in 2021.
So that's a massive contributor.
Well, but we never actually get the cash.
I understand that. We're just saying, is there likely to be some money flowing through that that we don't have in there yet.
No, I don't think so, because we're not doing a joint county project.
Right.
We have the one with the state, but
Right.
actually, I think they're the ones that are the lead on. We don't have to do anything with that, I don't believe.
So in 2020, the net expense was 400,000. In 2021, it's going to be $1 million.
Right.
Well, except you really can't count that as,
Just looking at the
I don't
effect.
know how to-
I'm just looking at the effect on our reserves. That's all.
So what I hear David asking is that, so the cash, that 587,000 that is other income really doesn't, it's a straight flow through. It doesn't come out of our reserves, but we're accounting for the total cost of the project. And so what we actually paid in capital improvements was 450,000.
Right.
And
Well,
David
except-
is saying, well, okay, we're now doubling that this year.
Without changing the scope of the program.
Right.
That's just.
You
Well,
see,
wait a
we've
minute,
gone
we
from
are
450 to 900,000.
Yes.
But we're
yes,
changing
exactly.
the scope of the program. We're doing more.
We're doing more.
It's still
That's
it's still costing $1 million.
right. We're
Because
doing
we're
twice
doing-
as much.
Okay.
Yeah.
Okay. Well, that's
And not getting as much reimbursement.
okay.
We're not getting
You
any.
might put it that way.
No
Yeah.
reimbursement assumed. Okay. But that's a large contributor to our $800,000 deficit this year, isn't it?
That's absolutely correct.
Right.
That's
Okay.
You're
absolutely
absolutely
right.
right, Dave.
It
Okay.
always is. It's always that.
Yeah. It's always
It wasn't
capital.
last week.
It's always capital.
It
Yeah.
It's
wasn't
not usually as much as that.
No. it wasn't
That's
last
correct. That's right.
We could
I-
reinstate the estate tax and then we wouldn't have this deficit.
Exactly.
Well, we can't,
week. That ship has sailed, Nancy.
That ship has sailed.
Yeah.
long ago.
I
Just
think it's
again,
sank already. I think it's
frustration,
sank already.
just a frustration is that we think it's smart to do these the roads where the county reimburses us for a percentage of the material. But the money they reimburse us, as we talked earlier in this meeting, shows up elsewhere. So 229,000 of our roads program is county roads
Right.
that quite frankly aren't in that bad of a shape. But since we get about 50% of that money back, as long as the county's got that program going, we think it's stupid to pass it up.
Yeah.
So
Absolutely.
we could chop that out and just say, no, forget it, county, and we'll hopefully see you again next year, but we don't think that's prudent, so.
But almost all of our capital improvements get paid for out of the general fund anyway, because it's a transfer.
Oh, sure.
No
Right.
matter where it gets booked, it's the same
I
difference.
understand, but that affects our overall reserves on all
That's
funds.
you're exactly right there.
Exactly.
Okay. Thank you.
And just as one other aside, when you add up all of the engineering that's embedded in this capital budget, plus the retainer back up on the admin budget, it's 200 and some $1,000, and all the more reason that on my list this year, as we did identified in our long range plan, I want to do competing bids for our work. And maybe we'll find that it's a good deal we're getting, that anybody else would charge more. Maybe we'll find different. Maybe we'll find you get more service for the same amount of money, but we got a fairly large number that gets embedded in here that we pay for our engineering service. So it's a very high expenditure
Yep.
and a
that
good
was,
one. And don't get me wrong, it's a very necessary one. Don't get me wrong. So
yeah, you can't not have engineering, but that's right. And it was very much an important action item was to compete the engineering services and some other services that we are contracting
Exactly.
for.
Yep.
All right, I'm going to open the floor for questions or comments on any of the other funds. I don't think some of them are pretty small or pretty self-explanatory.
This is just, again, out of one pocket into another. But Janet, I know you've said many times that once you fund a special fund, I don't know if it's impossible to ever get the money back out if it takes a council vote, or once it's in there, you can never touch it. But we've got a number of accounts that the money just keeps sitting in there and we're not bringing it down. And it may vary by fund, whether but for example, the building bond deposit fund, can you talk about that a little bit? We end up with $82,785 in there. What is that for, and what?
It's other people's money.
Yeah,
You
they have
lost
to
me.
put up a building bond when they're building. So
Gets
we have to give
refunded
it
to
back
the
once they
individual.
complete the project.
And if they don't, our legislation needs to be clarified on this. Dave and I both talked to Todd about this. It's something we need to revisit this year. It's a little unclear. I mean, at some point we can make it go back to the general fund, but the way that it's stated in our ordinances right now is really confusing. Joanne understood it somehow, but somehow those vibes didn't come down to Janet, and I need it clarified before I move those funds. So those will get moved, but they haven't been moved in the years that I've been here.
So
Joanne did it right before I came.
are there building bonds in there that aren't current? Is that what you're saying?
Yeah, there's building bonds in there that have been since I got here. And if people don't, they have to request for them to be returned at the end of the project.
Huh.
And sometimes they don't.
So if they don't, would that end up having to go to the state as an unclaimed fund?
No, it goes into our general fund based on our ordinances.
Okay, just checking.
Yeah.
Janet, after what period of time does it go into our general?
Well, I mean, it's been a while since I've read the ordinances. I just know that it needs to be updated before I'm going to move those funds. So, I'll have to revisit that with Todd.
Maybe putting a time frame in there that.
Yeah.
Well, there's like a 5-year time frame, I think, but it's there. I have to go back and reread it, but some of those funds could be moved. It's just vague, I guess is the best way to say it. Don't you think, Dave? From when we
A
reviewed.
little, yeah. Mhm.
So
Other
then I
funds,
look
but
at-
like if you look at some of those other small ones, I'm hoping we can spend some of those because those are special funds. Other ones, it takes a court action to close the fund and return like that building, that one for $2,700. That one would need to go to court and have that closed. The bond retirement fund, I think it is.
Yeah.
It's got like $2,700 in it. That would need to be done by court.
And the legal
Okay,
fees
and-
would be more than 2,700.
Yeah.
Can't
Yeah.
we do it ourselves?
Your point, Chip, is that at the end of this year, we're expecting to have $500,000 trapped in these special funds. Is that?
Yes.
I mean,
and-
that's-
Well, not really, because
Well, I
some
don't
of them
know. I mean,
belong there.
how do you know?
Well, some things are there for a reason. Some of them
Oh, they are.
don't have a
Well, and
reason.
you can't go into the new year having them all at zero.
No, but at the end of the world, we want them to be zero.
Well, not necessarily.
All right. Well, my
Like,
point
look
is,
at the
are we
mayor's
sure-
discretionary and the Purcell Trust.
Are we sure this is the right level? That's all I'm asking. It's a
Well,
lot
I
of-
the biggest
only
single
transfer
number
what
is
we
water.
need to.
Right.
The
And we
single
have to,
biggest-
you really have to look at it fund by fund.
exactly.
Because each
exactly.
fund is different
Each
in
is different.
purpose and in
Right.
amount. But I think,
On that
Dan-
score, a quick point, Tim, on the coronavirus relief fund. I understood that if the money wasn't spent, it had to be returned.
They changed the timing. It's the end of
They
this.
extended it
Okay, good.
a whole year.
So we have to find some other coronavirus things to spend this money on.
Well, this was
Exactly.
already encumbered for our AV project. I mean, we had appropriated all of this money already.
What's the AV project?
this is the project to allow us to be able to use the community house to do webinars and virtual meetings and the
And the
equipment
town hall.
necessary and
Oh,
the town hall.
audiovisual. You mean audiovisual? Is that what you're saying?
Exactly,
Okay,
exactly.
Thank you. Okay,
We're coming up
I get it.
with new technology.
Got it.
So just to complete that circle, the other big special fund category is water, where we end up with 155,000, and we're kind of done with our water. Is that? And I get really confused. So what if we move it out of there into the general fund, which we could use on something else? It still comes expenditure. I guess I'm just again wondering when money's sitting there like that how would we use that water money for water going forward?
Let's say we have a pipe go bad. I imagine that's gonna fall on us, no, Dave?
Well, breaks are covered with the Cleveland Water under our current contract. I'd have to try and study that to get a better understanding of.
So would that be a fund we'd have to go to court with to move it?
That's something we'd have to talk to Todd about, but yes, I would believe so, because those monies came from assessments specifically for water.
Maybe we should ask him on these ones and maybe we could do them all in one.
Yeah, I'm a little nervous to do it so quickly because the assessments just stopped in 19. So I guess I would, just in case there's some kind of cost that comes up, but.
So
Yeah,
Jan, just so I understand it correctly, what you're saying then is because the debt's retired, but we still collected some tap-in fees, if you will call it, there's a positive balance, correct?
Right.
Okay.
And we
So-
probably made a loan payment before the first assessments were in.
Mm-hmm.
And some of those could be from the ones that were outside the village that didn't get assessed, but
Right.
paid into it.
Right.
So, so Janet, on those funds, the land conservation fund, I imagine that that's our balance of the levy,
Correct, I
the
think.
rest of which goes to the Gates Mills Land Conservancy. So, and am I to assume too that the expenditures out of that are, again,
They're the payments to the Land Conservancy, and I think usually we pay like
Dues.
one of the dues out of that, Cuyahoga County Soil and Water or Chagrin River, Chagrin
Chagrin
I was gonna say
watershed.
Chagrin.
Watershed. Yeah, we
Yeah.
pay one of those out of there.
okay, thank you.
Chip, you said
And
earlier.
this is the last year for that.
Right.
Chip, you said earlier that the expenses for the wastewater treatment arrangements won't be reduced until next year. You're saying?
Yeah, because they bill a year in arrears. So the
Year in
bill
arrears.
this year will be for last year's expense. Wonderful
Gotcha. So
system.
that's still at $200,000. Okay.
Could be.
Um,
It varies wildly, or can vary wildly from year to year, inexplicably and wildly.
Yeah.
Yeah.
Wildly is a
dealing
good
with the
word
county.
for it.
So 2 expenditures in here that we haven't talked about. For water, 25,000. Any substance behind that, or is that just a plug? Do we know what we might have to spend money on for 2021 in water?
Put in there.
Where are you there, Chip?
Page 7.
Page 7, the
Water fund under expenditure, the line expenditures,
I think
25
that's
grand.
our water use fee for the
Yeah, for
hydrant,
the hydrant.
for the hydrants.
And the 15,000 that we're estimating for income. What's the
Well, I
substance
thought maybe
behind
there would be a tap in, you just don't know.
Okay, so that's a tap in. All right. And then under Parks and Recreation, 38,200 expenditure.
Well, I added up what I'm hoping will be the rest of the community house renovation, the concert, the holiday expenses, the art show. I mean, you just add all that up. I don't know how much is left to do in the community house. The mayor's kind of spearheading that, so I just took a stab at it.
I'm working on it.
There you go.
Okay.
She's working on it.
So
Well, I mean, it's some of that
in
for money
summary,
that was raised in 20 that we haven't spent yet. Is that fair?
Definitely.
Yes.
So that's back to that timing issue. It looks bad in 2021, but it's because of the lag. Same thing with the COVID. We got the COVID money or the safety fund money in 20, and we're going to spend it in 2021. So we get nailed.
But we got it in December, so.
Right. Nothing wrong with any of it. Just it's the way that they close the books. Now, state grant, we're going to spend $4,725. What
Well,
do we do with
that's
that?
remaining, that's Greg's money for training. It
Oh, okay.
left over it was money that you would get back from the Attorney General for career professional training or something like that. Is that right, Greg? Some kind of training that professional training that police took, and the
Yeah.
Attorney General would reimburse us. And it had to go by them, it had to go into a special revenue fund and get spent out of there. So when we can, because those trainings aren't being offered anymore, Greg was given the approval to go ahead and use that money for training. So anytime we can use that before his regular training budget, we will.
The
So
state
Tim-
had, yeah, the state stopped that in 2017. So this is just leftover funding from that. And it has to be specific, like certain types of training that you can use that money for. You can't just use it for anything that you want.
David?
Tim, in summary, by the end of this year, we will have posted our largest annual deficit for a long time, and we'll have our highest level of reserves for a long time. Isn't that interesting?
Yes.
So
Which,
to build on,
which makes it so important that we put this into a longer term context, which I'm sure you're going to be doing.
Yes, indeed we are. What we intend to do is, what we intend to do first is Janet's going to make the corrections and changes to this budget.
Yeah.
And get that out and get it approved through council at the next council meeting.
Right.
The long-range financial plan for projection likewise needs to be updated, both for 2020 actuals and the 2021 budget. And we have to make some set of assumptions around what our municipal income tax revenues are likely to be going forward. And as you've noticed, there just lately there's been a lot of uncertainty around that on the upside. Whether that is a long-term structural change, it just isn't clear at this point. And so
we need to have a strategy.
It's a strategy indeed. But in my view, we should be we need to rejigger the forecast. We absolutely need to be pursuing the projects and action plans identified during the last go around.
No question.
And both the mayor and I at our last council meeting cautioned against thinking that we were rolling in dough necessarily as a result of this particular unexpected set of payments. So yes, I agree with you that we need to continue to take a longer term point of view and make sure that we are keeping the village expenditures on a sustainable path relative to revenues with whatever uncertainty we may have.
Yeah.
one,
From conversations previously, we never really considered revenues to be a risk.
That's correct.
Now we have to. The other big risk we face is roads. Beyond that, there aren't many risks.
I would agree with that. I would say that the roads are a well understood set of risks.
Exactly.
But the revenues,
they take us by surprise.
Well,
That's culverts.
they take us by surprise if you only look on a year-to-year basis.
Exactly.
But if you look over a period of time, I think in general our exposure there is well understood and well studied. Chip's done a lot of work on that. Dave certainly has his arms around it. What is not well understood now is in particular the municipal income tax revenues.
Absolutely.
And we have limited tools in terms of understanding that. Because we have because if we were able to look at a large population on an average basis, that we might and reduce the bell curve around that. That would be one thing, but we're now often faced with single individuals, and it's very difficult, and they can't forecast what their what the situation is going to be 5 years hence. So we have uncertainty, and to your point, we need to have a strategy around that uncertainty.
Absolutely.
just as an aside, buried in the 2020 number and the 2021 budget is a drop in municipal tax other than from the one individual of approximately 250,000. And we spent all of 2020 since COVID started trying to figure out what the we said, oh, we're going to get hit on both real estate and municipal. It makes sense when you think about it that people weren't stopping paying their property taxes. We don't see, I think, a lot of people losing their homes in this, but we had a lot of people that were out of work. And obviously by losing 250,000, and that's what we've embedded in the 2021 budget.
Yeah.
Hopefully that doesn't spill over into real estate tax and have some delinquencies there. But going forward in 2022, hopefully we begin to see a return to normalcy of people getting jobs. Our long range plan for 2022, the deficit was 450,000. That's where we had it at that point. We finished 2021 before Janet's adjusted the numbers with our total cash reserves fund balance being at about 6.3 million, up from 4.9 at the end of 2019, heading into a deficit in 2022 of 400,000. Again, all of these numbers need to be updated. So, and obviously we were projecting deficits in the ensuing years of 400,000 a year thereabouts. So, but certainly a better picture than where we finished our long range plan only 3 months ago. Unbelievable change.
No question.
Well, the thing is, we have to continue to be prudent since we really don't know the future.
Why would we not be prudent?
We're always prudent, but
Exactly.
we can't look at this.
So what's new?
Well, but there are things that we want to do into the future, and we do have some more flexibility than we did. We don't want to only just look at the past. We want to look at the future of what the village needs.
Absolutely right.
And how to continue to attract new young families. And
That's
continue
exactly
to
right,
retain the
Nancy.
ones we have.
How about some new old families? What's wrong with that?
Nothing. Well, we've
Right,
tried that in the past. You
We
weren't
want
very much
to
in favor
make
of
our
that.
village more attractive, is what we're saying.
Yes, we always have to keep the village attractive.
I think the answer is the long range plan to
Right.
find out the
Absolutely.
master plan, how that's going to give us the advice we need to make that happen.
I think
And
that's right.
just-
Well, I think what I'd say is that the long range plan, particularly the projection, gives us a context within which to work. But we have hopefully a project getting started on that sort of envisions what we want Gates Mills to look like in 5 years. That will have a big impact on the projects and the initiatives and the priorities that we will then place in the financial context of the village. So the numbers are not going to necessarily tell us what to do to make our village more attractive, but it will put a fence around and help us prioritize what to do.
Sure.
Yeah.
Absolutely.
So I think the master plan is critically important. And the sooner we are able to do it, and that really is pandemic related, the sooner we're able to do it, the better, because that really gets to the big vision.
One item, Tim, that I haven't heard discussed is that the weather is changing, the climate is changing, the shape of our village, its contours are changing. I would have thought a plan relating to water management would be very important, because I know individuals are struggling with flooding in their basements, on their roads, and so on. And the world has changed. There's more rain, and it's more difficult to handle. And the fact that it's difficult to handle means that our contours have changed. And it's just something that it seems to me all communities should be thinking about, particularly one with hills like we have. So just a thought.
Agreed. I think that is a significant issue. And as a fellow who has a basement that gets wet from time to time, I wholly endorse that. So, I know that Dave has thought about it, because I've had conversations with Dave about it. But I certainly agree.
It's going to get worse rather than better is the point.
Yeah, totally agree. Well, on that broader visionary note, I'll entertain a motion to adjourn. And what we'll do is, as I said, is Janet will make the adjustments necessary, and then we'll get that out to all of you.
Thanks to Janet, thanks to the department heads for well put
Absolutely.
together budgets. So
Is that
Job well
Venus?
done.
Thank you, gentlemen. And I'll make that motion to adjourn.
Thank you, everyone.
Nancy,
Thank you.
is that
Thank you.
Venus?
Good meeting.
Good
Yeah.
meeting.
What's that? Yeah.
Thank you.
Well done, Jim. Good job.
Thank you.
Thank
All right,
you.
take care, everybody.
Bye.
Have a good weekend.
See you soon.